Well, a $2.2 billion takeover bid for the owner of Melbourne's Eastlink tollroad is set to go ahead after a majority of investors approved the deal today. The offer from Horizons, which is owned by a consortium of global fund managers, was for 55 cents per security. And while the support of institutional investors got the board over the line, retail investors were largely against a takeover. Emily Stewart reports.
Over the last 7 years, John Hastie has bought more than 50,000 securities in Connect East. He saw it as a great long-term opportunity to invest in a local company for his grandchildren.
We believe that the company does have a future, or should have had a future, and we're going to be disappointed to see this company disappear yet overseas, like many other Australian companies that have gone to overseas holdings.
Horizons is an investment vehicle owned by a consortium of global fund managers and led by Sydney-based CP2. They've offered investors 55 cents per unit, or the alternative of scrip in a managed investment scheme if enough investors are keen. The board needed 75% of investors to approve the deal, and the vote was expected to be tight. But with the support of institutional investors, the deal received 80% approval.
I think the institutional investors sat down and had a look at it and say, look, you know, the market is still poor, the market is still volatile. We're offered 55 cents cash now. This would be the sensible thing to do.
But many smaller retail investors at the meeting had paid more than $1 per unit, and they weren't happy with the offer.
I think it's wrong. We're selling off Australia. You know, and the people who are buying us, Horizon, they're an overseas company, and as such, they obviously have faith in Connect East. Why haven't our directors got faith in it?
Chairman Tony Shepherd, however, says it's a good deal at a 22% premium on the last closing price.
We still think it's good value, but I understand that there will be some disappointed investors.
He says Horizons would have gained control of the company within 2.5 years anyway.
If we leave it too much longer, CP2 through the creep provisions will take control of the company without paying a premium.
What they're really buying here is an asset that's now proven. It's in the ground and it's generating revenue, and they are obviously delivering on that. And really there's a whole lot of funds out there, I suppose, for infrastructure assets because they offer a pretty good rate of return, a long-term growth profile that meets the risk requirements of these investors.
The current management team of Connect East is expected to stay with the new owner, but the rest of the board will resign within weeks. The deal now awaits final approval from the Victorian Supreme Court.